Yep.
Hey, Mr. Grider, how are you doing, sir?
Hey, good, Albert. I just noticed that you don't have a black eye on this webinar, right? For your
No, no,
jujitsu
no.
stuff, right?
Finally, finally, I mean, don't get me wrong. I mean, I might get another one. It's the nature of the sport. But hey, Brandon also practices jujitsu. He's actually a
Oh,
high
that's
performer.
awesome.
He's a brown belt, so I'm just a lowly purple belt.
Man, you're doing it, right? So, I mean, that is great. But,
Yeah.
man, I'm glad we're having this webinar today on this topic. I think it's very important, right? As I kind of just thinking out thing. I mean, I talk to a lot of lenders out there, a lot of our partners, and so always the question comes up is like, what's different about HomeXpress? I mean, all these other companies come out, and there's been a lot over the last 3 years. Everybody does non-QM. Everybody does bank statements, loan, DSCR. What makes you different? And I think this is one that, we talk about it, but now we got the real what's behind the scenes and what is our philosophy. So I think this is going to be very great for everybody here to kind of see what makes Home Express different.
I couldn't agree with you more, Mr. Grider. And as always, we want to welcome everyone. Thank you again for attending another webinar here with Home Express. So, like Mr. Grider was saying, our topic for today is like, hey, inside the Home Express credit team, we want to get you guys to meet some of the people that make decisions and how we can help you fund more loans with Home Express. So, with that, we always want to thank you for your participation. And with us today, we have Mr. David Grider, who is our Senior Vice President of Sales, myself, Albert Martinez, who's your corporate trainer here at Home Express. Our special guest today, we have Pete Garfinkel, who is our Senior Vice President of Credit, and we have Brandon Edwards, who is our Director of Credit. So with that, Mr. Grider, I hand it over to you, sir.
Thank you, Albert. Thank everybody for joining today. I just thank you for staying in the business, right? I had to talk about this about 3 months ago, but man, this is a tough market out there. It's very unique with the ups and downs of the bonds, all the volatility, kind of the affordability going on, and kind of structuring of loans. I know a lot of borrowers out there might have side businesses going, just trying to get things going. We see the investor world trying to figure out what deals that they have. So appreciate you guys being here and then kind of in our business. Ultimately, this is why we're here too. We love helping out ultimately the borrower that you have get the home that they need for their family or get the cash out for college tuition. And this is what it's about. So I'm glad you're partnering us with for those objectives for their families and making their lives better. So with that, let's just talk about the agenda today a little bit. So we'll go to the next slide, Albert. Okay, so I'm going to talk a little about a value proposition. That goes into why we do what we do and kind of the things how we look at, right? And we're going to look at underwriting or credit philosophy. And then we're going to share with you some scenarios that are exception based that we approved. And so you guys can think about that. As we're kind of going through this webinar, please put in the chat any scenario that you would like to have on a loan. Maybe it's something you have right now. And then we're going to share with you how you could get that to the decision makers fairly quickly and let you know what we can do on that loan and go through that with you. You'll find out how to find us on the pricing engines. And we got a new program I'm trying to introduce today to you guys. Really great. Just go over a high level of our programs, and then hopefully answer a lot of questions on scenarios that you have, or it could be anything in the marketplace. You want to get what the industry's doing, but more specific to help you. If you put in your scenarios in here, you got the individuals here that can address those. So let's go to the next slide and look at our value
Hold on, Mr.
proposition.
Grider.
What?
Let's not get
What? You
ahead of
got a
ourselves with
poll?
these slides yet. We gotta
Oh my
I know
goodness,
how
Albert, you're
progress
great.
goes,
You
Mr.
got a,
Grider.
you
We
got
gotta we
a,
gotta ask the masses. So let's go
okay,
ahead and let's ask them. What
okay.
percent of your overall production is non-QM right now? Is it less than
Wow.
10%? Is it 10 to 25? Is it 25 to 50? Or is it 50% plus? We kind of want to hear what are you currently doing for your non-QM? How much of it is of your business?
This is a good one, right? Because we watch the studies. We know non-QM's taking more of a share of the business, but for our partners out there, it's really interesting to say. Here's what I think it is. It's 25. It's in the 25 to 50% bucket today. That'd be my guess. But
I would say that you are correct. It's actually 53%. It's actually more than 50%
wow.
is non-QM. That's really, really good.
Wow. Wow. Well, thank you guys for that, right? So it really has taken off, you know. So HomeXpress has been doing non-QM for over 10 years, right? We're one of the first entrances into this, and we're a true lender. It means we underwrite to our guidelines, and you'll kind of get into that. So, but here's our value proposition. I kind of summed this up, you know, kind of what it is, but we're going to go into a more in depth of what that is, and then how we apply this to our lending and to the loans that you bring in. So Home Express Mortgage Corp is a common sense lender dedicated to evaluating the full picture of your loan, right? By considering all variables in our underwriting decision, we provide tailored solutions delivered with our signature commitment to speed, ease, and convenience. That's a very summed up one, but we actually have it written down as well. So with that, I'd like to turn it over to Pete Garfinkel, our Senior VP of Credit, to kind of go over our credit and underwriting philosophy with you.
Thanks, Dave, for pitching it over here. And, I love that summary slide that you just showed. It hits on so many things that make Home Express special, right? It's our overarching goal for speed, ease, convenience, common sense underwriting, taking our 10 and a half years of experience as a non-QM specified lender in this space to help a better experience. The slide that we're seeing now, this is straight out of our guidelines. Like, this isn't something that's created just for today's presentation. This is literally 1.1. It's the first thing that comes into our guidelines when they're opened up. And if I could draw attention down to the second to the bottom paragraph there, you'll see that common sense is actually written into our guidelines. That's how much it's woven into the fabric of Home Express and how we look at loans. We take that common sense underwriting approach. We apply it to our own guidelines, right? We're not beholden to anybody else. So obviously, there's rules and regulations out there, right? But we are the ones who are writing those guidelines, and we have the power to make quick decisions on those loans that may not fit in the normal pathway, right? That go down the straight in the middle of the guidelines. We believe in this so much that we've actually created a department here in the credit side of things to help you guys with your scenarios, with your exceptions to the guideline requests, to understand if you've got something and kind of smooth out that runway and really speed up the process. Once back to the speed, ease, and convenience. That's not just a sales mantra. We have that inside of the credit department as well. And it's really important to us that we can get you those answers as quickly as possible so that you have a good yes or a no on your deal and you can pull it off the street. With that said, I'd like to introduce Brandon Edwards, the Director of Credit here at Home Express, and he is the guy that sits on top of the desk that helps you guys with your scenarios and your exceptions. Brandon?
Thanks, Pete. Good morning, everyone. As mentioned, I'll be walking through a few recent credit exceptions that we've approved here in the credit department. But before I jump into those examples, I'd like to give you guys a few tips that would help you when you're ready to submit your credit exception request. So the first one is, what is it that you're trying to accomplish on your loan, right? And then what's preventing you from moving forward? And then lastly, why should we grant that exception? So providing compensating factors. Then when you're ready to submit your exception request, you can do that one of two ways. You can register your loan, spell it out in your synopsis, and go ahead and submit it into underwriting. And underwriting would review that exception request. Or you can register your loan and then reach out to your account executive and discuss what that exception is, and they can take it over to the scenario desk to have it reviewed prior to submission to underwriting. That gives you a little peace of mind before it goes into underwriting. So let's go ahead and jump into the first example here, Albert. This was a LTV exception request by 5% to 75. We were capped at 70 because the borrower had a 679 mid score. They missed that LTV bucket by 1 point on their credit score. This was an InvestorX purchase. After reviewing the loan, the borrower was a experienced property investor. They had as agreed mortgage dated back to 2012 with a positive DSCR over 1. I felt comfortable go ahead and granting that exception. I also noticed on the credit report that the borrower had a potential to increase their score. So I advised the AE to get with the broker, maybe work with the borrower, get that score bumped up, and that would get them into program and much more favorable pricing. Let's jump into scenario number 2, Albert. This was an LTV exception request by 5%. The borrower was capped at 70 due to being a non-perm resident alien. At a 711 mid score, this was an InvestorX cash out refi. We were advised that the borrower had 24 months reserves in excess of the cash out, so aside from the cash out. And they were experienced property investor, good overall credit with as agreed housing in the last 3 years. We found comfort in go ahead and granting that exception. Let's go into example number 3. So this came over by from Underwriting. This was a loan that was getting ready to CTC, and they were short on their reserve requirements. This was an owner-occupied purchase, 90% LTV. We require 6 months reserves. The borrower only had 3, so they were short by 3. They had a good credit score, 712 mid score. The departing residence was free and clear with the intention to sell. They just hadn't sold the property prior to the purchase of this loan. So I knew they were going to be coming into additional funds here in the near future. Strong self-employment for the past 5 years. Great credit with all the accounts paid as agreed for the past 10 years. And the down payment of 10% was all of the borrower's own funds. So they had skin in the game. We felt comfortable granting this exception. Going to the last scenario, Albert. Okay, this was an LTV exception of 5%. We were capped at 70 due to the property being a short-term rental. This was a 3-unit property in Carlsbad, right on the beach. So it's a great short-term rental location. Good score of a 789. InvestorX cash out. They had great mortgage history, multiple mortgages on the account on their credit for the past 10 years, all paid as agreed. And the borrower had owned the property since 2008, so they had vested interest in the property and experienced managing this property. We felt that it was appropriate to go ahead and grant that 5% LTV exception. So that's it for the examples. I'll go ahead and turn it back over to you, Pete.
Thanks, Brandon, for walking us through those examples. I think that's pretty good subset of what we do here at HomeX and what the credit team sees on a daily basis, right? Once again, these are things that come in. There are some near misses. There's some ones that are a little bit bigger misses. We apply that common sense approach to them so that we can get you guys an answer quickly, and hopefully it's a yes so you can get that loan off the streets, get it going, ultimately do a funding here at HomeXpress. This is something, once again, that is super important for us as a company, that we are here to partner with you guys and to have that relationship. You'll notice that each one of these requests had it spelled out clearly for us, and then we were able to then give an appropriate response timely. I think that we're currently, if not 24 hours, we're same day on every single one of these. And some of these were up front, some of these were while the loan was already in-house, so we had to make some exceptions to get that loan to clear, and we're always looking to help you guys out. With that, back over to Dave to talk about where you can find us.
Great. Hey, thanks, Pete, for that. And Brandon, great examples. And I know they're only 4, but literally they do this all day. This is just a small subset, as Pete said, of what they look at. And with that, I mean, where do you find us, right? So I'll just take a look at this. I think we had something in chat that popped up I looked at. We're on Encompass, right? So yeah, we'll do that. So Albert, if you could go to the next slide, I'll show you what pricing engines we're on today. Obviously, we have our portal, and if you need some access to that, I have my contact information. We can set you up so that you can look at our portal, price deals out. You can save scenarios on there, and that. You just wouldn't be able to submit until you're approved, if not approved. But that's a real easy process too. We do everything in-house, 24 to 48 hours, you'd be approved to do business with us, right? So we're on Arrive, LoanX, OB, Lender Price, Loan Sifter, and Poly. Soon to be Encompass. That is actually on our list, and I'm hoping to get that done in the next probably 3 to 4 weeks. So we're looking at that. So more to come on that. We want to be, available way where you find us, right? So we're really trying to be real good partners on this whole mortgage process. You're talking to the borrower. The borrower wants an answer right now. Can give me some deal. I like HomeXpress. I know what they deal with. What is kind of their pricing, right? So that way you'll be able to access that right away. And that's important to us. So we're putting that in play with most pricing engines out there. So with that, Albert, I mean, I don't know. Do we have another poll at
We
all?
do, Mr. Grider, we do. Before we go into the next slide and talk about some of the really cool upcoming things that we have. We want to oh whoop, that's the wrong one. Let's go ahead and let's actually ask the let's
Okay.
go ahead and let's ask the masses the correct poll, which is what we want to know right now is of your non-QM production, how much is currently being sent to Home Express? Are you not sending any of it? Are you sending us less than 25, 25 to 50, more than 50, or you're sending us just all of it? We want all your non.
Wow. We know the industry we're not QM's going up, and it's tough to be a lender. Everybody's got their, kind of what's in their wheelhouse, and it's like we're not doing 10-unit properties, and I get all these different things that come out. But this is a great question. We'd really like to partner with you. We provide a lot of flexibility, competitive pricing. I guess I'd say the most highly trained AEs in the country in the non-QM space. So I'm hoping it's 25, 50, or 50% plus. I'm hoping, man. But let's see. And then
It's a
how can we earn
it's a
that?
little bit of
You
a,
know?
of a mixed bag. So some of them are saying it's between none, 25, or we're getting all of it. So
Wow.
we
No,
definitely want to
okay.
capture all of it.
Yeah, well, hopefully you can experience if you haven't. We're here to help you, and we get that. There's relationships out there that you're accustomed to. We totally understand that, but we'd like the opportunity to earn your business. We really would. So if you can reach out to me, if you haven't, you need to get credentials. We'll block you. Maybe there's a deal that hey, maybe you're struggling with, and now. Hey, let's get it to the scenario desk and have Brandon and Pete and his team kind of look at that, see if that's a deal we can get done.
Absolutely. And if you haven't sent us your non-QM business, you're going to be really excited about what we have to share with you right now.
That's correct. Here it is. New program we just launched this week, and it's called PremierX, right? So, very important that we kind of be on the pricing so you can see this. What this is, I kind of put non-QM programs in two categories: consumer purpose and business purpose. But out of the consumer purpose, there's different qualifications based on credit scores, reserves, all these different things. And so we did kind of a subset of this to enhance the pricing for you on the more qualified borrowers and the larger loans. So you need to have a 720 score and above. That's both borrowers. Minimum loans 400,000 goes to 3 million, and you'll see where the pricing on this is really good. And these type of borrowers are probably a little more rate sensitive, those type of things. And you'll see us in the top section of any pricing engine that you're in. And we're hoping to deliver this for you. It's purchase season, so help you close more loans. And I think the first day was Monday. Believe it or not, we got like 6, 7 loans of these in underneath this PremierX. So if you go through that and you're wondering where I'm going to send it, and we're not on a pricing engine that you see there, it might be because your admin didn't click the box to have HomeXpress show up. So that's why I kind of go over that. If you can't see us, kind of find out with your admin to put us on one of the lenders to kind of view that pricing. Or you can go to our portal. We have a quick pricer, I think, on our website that you could look at as well. Or you can just contact me at the end here and we'll set you up. All right. So let's just kind of go over a high overview of the programs that we have in the non-QM space, right? So consumer purpose, there's subsets of that, like you saw the Premier X, the better pricing, but there's regular loans too in what we call the core non-QM. Maybe they had some type of credit event or those type of things. Great with those. But to get in, it's a minimum FICO of 600. Again, we saw an example of 90% LTV on a purchase. DTIs we can be flexible on for those with higher residual income. Those are always a compensating factor. That in reserves, loan amounts to 4 million. Talk about rates. We're consistently going to try to be there very competitive in the top tiers of that. Hard to be number one all the time. It's very competitive. We try to be, but we understand that that's not always possible. When you look at income on consumer purpose, this is really where you value your account executive and the scenario desk. How do you structure loans when they get more complex over since COVID happened over the last 3 or 4 years? Some will be W-2. They've been doing a side business for 3 years. They have reserves or maybe some assets over here you may need. There's lots of ways to put deals together and make these work. And this is where your AE and the scenario desk can help you out. But we got to have that data first. So when you look at this, and the AE will say, what kind of assets they have? What other jobs they have? You just kind of see that, and you can put a deal together. And again, very much a common sense. The next slide, I'll just do a high overview of our business purpose. To get in at 620, everybody kind of predominantly does these DSCR. That's the cash flow of the property and the credit profile of the borrower. That's kind of how it's done. But also you can do income docs on these to get a little bit enhanced pricing, which turns it to a DTI file. But we also have 5 to 8 units on this available. Cash out to 80%. Which is there. Loan amounts to 2.5 million. Very streamlined, conditions on this to help you close them quickly. We'll go to the next slide, Albert, and this goes on with business purpose. I try to go in there. It's like everybody asks me, how do I get more business? And this is probably one of the ones that's most popular that we go out. Let's say you're a licensed MLO in California. Okay, that's a state where you're required to be licensed in to do business purpose. But you can see the dark blue. Those are all states where it's not required. So you can actually market in these states, send those loans to us, and that's perfectly fine. Don't have to be a licensed MLO in those states for business purpose. Helps expand your marketing tools to you. And we'll go to the next slide. And this is one where we've been launched our non-del correspondent channel about 2 years ago now, right? And what happened is we had a lot of partners that kind of look at, man, we're doing some of our agency business in the non-delegated spot, how that works for us. There's lots more flexibility. As you know, if you've been doing that, we have that available in a non-delegated correspondent with us, HomeXpress, non-QM. So if you're interested in being the lender, with really low risk on your side, we have different programs on that available to you. Love to hear from you. Love to talk with you, and put you on as one of our clients and as a lender, and we're purchasing the loans from you with no carve outs on programs. And by the way, you still get the same scenario desk. They will look at exceptions through this as well. So you get best of both worlds. You can be the lender and have our credit and underwriting and credit desk philosophy behind you. All right. Now, it comes to these questions, I think I just want to emphasize, how do you get us to look at your, I guess, exception, or can you do it? I'm not sure. How do you do that? Right. Well, Brandon did talk a little bit about that. You can, submit the loan in, right? Put it on the borrower synopsis. Underwriter looks at it, then the underwriter can make a decision, or it can go up to the credit team, and they'll help with that. Where you saw some examples of those. Let's say you don't want to sub it, right? So you want to look at it ahead of time. You can register the loan, right, in our portal. Put down what you're looking at, whatever documentation you want us to look at to make the step. Contact your AE, right? And that'll go up to Brandon's team, and they'll look at that even before you sub it in. So we're trying to get different ways for that to make sure it gets appropriate answer to you right away. I wish I'd say all of them are yes. No, not there, but we're going to give you what we can do, and it's a great possibility for us to do it. Let's take a look at this. And oftentimes we've saved a lot of loans for our partners through this process.
Mr. Grider, before we get going into the questions, as far as our webinar topic for next month, I think that we should probably ask the masses and like to see what do they want to see for next month.
I agree with you, man. I'd like to know what you guys want to learn. So I think you got a couple options for them, Albert, to kind of choose from.
I do. So what topic would you like to see for next month's webinar? Would you like to see title and appraisal for closing? Would you like to see sniff out all problems to get a smooth, clean closing with HomeXpress? Or would you like to see jumping into the DSCR pool? What say you?
Oh, wow. I think it's going to be the last one, Albert. I think our most attended webinars has to do with, hey, tell us about DSCR, tell us how to get those done, what makes you unique, what kind of properties you do on those, which we've opened up that, I could go into it a lot. I mean, could go on it for 2 hours of looking at properties, these ones we can do, right? Short-term rentals, condo hotels. You can go into a lot of different things with this, right? But I think that you're going to choose the last one, even though the other ones are great. I mean, if you want to learn about titles and how to read title policies or appraisals, what are some of the things to look at? Because I'm sure everybody out there in today's environment, you got the appraisal from AMC, no matter where you're sending to it, and you come back and they're asking questions on it. I need different comps, right? Hey, there's no comps within about 2 miles of this property, but we know there are. Why aren't they used? And they're asking. So all that stuff we could go over with you. It's going to be interesting. I'd like to see what they say.
Seems like they want to sniff out all the problems to get a smooth, clean closing with Home Express. That is what they
So if
want.
you know the issue you're not sure of, you could know ahead of time, right? So on
Yeah,
this, but
sniff out the
excellent. Okay.
problems.
All right. So how to sniff out all problems. I like it. Love it. All
There we
right.
go.
So I think we're going to get to questions, right? So I'm hoping we get there.
Here
Again,
we
this is
go.
my information. You need any help at all? If you're looking for, hey, I'd like to get access to portal. I need to find out who my AE is. How do I get to the scenario desk? Whatever your question is, there's my contact information. Please send me an email. If you call me, I'll probably be on the phone about an hour straight with all the phone calls coming in. But leave your message. I will return every call today.
Here we go. So we have a few. So right now, Drew says, please sign up for Encompass PPE pricing engine.
We
Uh,
are on that path, Albert. Right? We're working with them, right? So I'm hoping it's 2 weeks. I'm saying 3 to 4. We'll be on there.
Awesome. David Taylor, he gives us 50% of his business. So thank you so much, David. And
Thank you,
also,
David.
he has a scenario for us. He says, do you all allow first-time home buyer on DSCR? Have a client who lives in Texas, buying in North Carolina. He's a college athlete in Texas getting nil money and buying an investment property in North Carolina under contract. Doesn't own a primary, lives on campus.
Wow, what a great! I'm gonna let Brandon handle that one because that's a great scenario desk question.
Yeah, I was going to volunteer to take that one. Um, so yes, we do allow first-time home buyers on a DSCR purchase. The only requirement for that is that the DSCR needs to be above 1, so that property needs to be able to pay for itself.
So that looked like a yes, right? So yeah, so makes
15,
sense.
15% down, no. Our max LTV on Investor X is 80, so they would need to come in with at least 20% of their own funds.
He said, sweet, we just got to approve with y'all. Awesome. Happy
Hey,
to hear
thanks,
that.
David. We
Sounds
appreciate
good.
you.
Yeah, awesome. We do have Chris White. He said, how much longer are we on for? And then is there a recording? So yes, Chris, this we do record these webinars. We will provide you a link. They're posted on our YouTube as well as our website. We do post the webinars, and as well, we will provide you a copy of this presentation so that you'll have it available. Nevertheless, if you do have any additional questions, or you need to get in contact with that AE, you can always reach out to Mr. Grider and we'll make sure to get you in touch. Okay, here we go. So we do have a question. It says, what recent credit events are acceptable and what are the required seasoning periods?
All right, Brandon, you want
That
to take
really
that one?
depend. Sure, that
Yeah.
really depends on what the credit event is and what type of transaction you have. Meaning, is it an owner occupied versus investor? We have different credit events with different limitations depending on the situation.
Yeah, go a
Awesome.
little deeper on that, right? So let's just take a consumer purpose loan. We'll do our standard seasoning is 2-year look back. We do have some ability to do bankruptcies that are seasoned less than 2 years, but we'll cap that LTV. Our real big kind of let's not talk about it spot is foreclosures in the last 12 years. That's going to be a no on every single program we have, right? So we do have opportunities. on the more recent events, especially if they're VKs, but kind of a 2 year. And then as the credit quality goes up and that price comes down, that time goes out further, right?
Awesome. Thank you for that. I have a question here. What compensating factors carry the most weight with your team?
I would say list all compensating factors that you have. The most weight clearly is how do they pay their debts, right? And their mortgage. So the biggest thing that we hang our hat on is mortgage history. So that's the strongest compensating factor. And then again, assets, right? What's the condition of the property? What's their stability? So we layer in every compensating factor that we can find. I actually look for those when I'm looking at those credit exceptions that come through, but it's always helpful for you to mention any compensating factors. Maybe I don't know they have $2 million in the bank, so anything that you can think of that would strengthen that deal when you're sending in an exception, we encourage and ask that you help identify any of the strengths.
Thank you for that, Brandon. I know that you kind of spoke on this a little bit, but this is actually a great question. And is what is the best way to package an exception for a fastest approval?
I would recommend that you register your loan with a completed 1003, including the property address and a credit report, and then list out the loan parameters, right? So you're looking at LTV, occupancy, is this a purchase, rate and term, cash out? How are we qualifying the deal? Is it income qualified versus a DSCR? So we need to know some basic loan parameters of what you're looking to do. And then again, as I mentioned, what is it that you're trying to accomplish? And then what's preventing you from moving forward? So what's the guideline? What's the issue that you're trying to overcome? Clearly state that in your request, and then we can look at it and let you know if it's something that we can move forward with.
Awesome. Thank you for that, Brandon. And then it looks like we have a last question here. And it says, what are the most common red flags that could cause delays or denials?
Great question. There's a lot. I think, Pete, I think you kind of have that kind of department of a list of red flags, but on
Yeah,
delays, right?
unfortunately, yeah, I do, and it is part of what the industry has in it, right? You know, I think that instead of talking about red flags, I want to talk about something else first, and that's what Brandon just mentioned, which is knowing your loan when it comes in. So if we know your loan and we know all those things that are potential issues, we can overcome them up front, let you know how we can proceed with that loan. I think that's more important than waiting for a red flag to pop down the road, which is really knowing your loan and your borrower up front. You know, unfortunately, as of late, you guys have probably heard about some of these things out there. You got Baltimore, you got Philly, and you got some pretty robust fraud schemes out there. And the central piece around all of those schemes always has to do with value. These schemes can't be perpetrated without value. So the biggest red flags we have are things where we see artificially inflated values, right? The value doesn't make sense for the transaction or the history of that property. And that's really something that will throw up a red flag for us. We'll take a deeper look. One of the typical ones is they bought a house for $100,000. They put 20 grand into it and it's now magically worth $400,000. That would be a big red flag for us because we're looking to see, is that value really there? And is this a part of a bigger issue?
Thank you for that.
Yeah.
Looks like we did have another one pop in. Chris White, I have a lead for DSCR residential cash out refinance. Client has a co-living house with a master lease from one entity and they co-lease. Can we use 1 year prior income for DSCR ratio, or do we have to use the standard 1007 rent?
I'll jump in on this one. That's a unique situation, and we'll see them sometimes where the houses aren't rented through a normal market type of transaction where it's a sublease, or maybe there's a business it's kind of in there where it's, student housing inside of there. We really are going to look for what the cash flow is on that property in the general market sense. So sure, maybe they've got a sublease going on, and underneath that sublease, each room's rented out at a certain dollar amount, and that becomes, let's say that the market rents was $2,000 for the home, but there's 4 rooms in there and they're renting each one of them out for $750. Now they have a $3,000 a month cash flow. That's not typical, right? We're going to go more with what do you have? What's the market? What does that 1007 support? Now, we're not going to live and die by the 1007. We allow for actuals versus market as long as there's a reasonable, delta between the two. And we know that that home can be rented for approximately that money by anybody in that market space.
Awesome. Thank you for that. Then I have a question here for Brandon. What is your current turn time for credit review and conditions?
Our standard turn time is 24 hours, but I got to be honest, it's usually same day unless it gets into, our inbox after 3 o'clock. Maybe you're looking at the next morning, but we're pretty quick here when it's helping with scenarios or even giving you a decision on your credit exceptions.
Awesome. Thank you for that. It seems like that's all the questions that we've gotten. I'd like to go ahead and have maybe Pete and Brandon give us some final words before we give it over to you, Mr. Grider, to close it up. So, Pete, over to you.
Yeah, thank you. Once again, a great opportunity to get in front of you guys, kind of peel the curtain back a little bit, and let you know how HomeX thinks about loans, taking that common sense approach, and really showing you the value proposition we have here, leaning into that speed, ease, and convenience. Brandon just mentioned same day responses on your scenarios and your exception requests, right? I think that that's pretty huge. We want you guys to have confidence when you're submitting the deals into HomeX, and that's why we've created this conduit of information for you. And hopefully it's something you guys can take advantage of, get a few more loans off the street, get that percentage of HomeX business up a little bit, right? Brandon?
I just want to say thank you guys for taking the time out of your day joining us. We do appreciate you partnering with HomeXpress. And the scenario desk is here to assist you guys with quick decisions. Sometimes, as Dave mentioned, we can't always say yes, but we want the opportunity to say yes when we can. And sometimes getting a fast no is a little bit easier for you guys. So send us over your questions and we're happy to help you. And again, thank you for joining us.
Awesome. Mr.
Awesome.
Grider, if you want to close us
No,
out.
hey, thank you guys for attending. I want to thank our special guests. They're taking time out of their day to introduce themselves and kind of see behind the scenes of how we bring more value to you by looking at your deals. And I can't say enough that we appreciate our partners out there. We know that you have choices to go, and we need to earn your business. And I think we're trying to do that. I'd love the opportunity for those that maybe have not sent us some loans to kind of try us out on your next deal, right? Give us a try. And I think you'll really like our service. And if you need an account executive to contact you or how to find us or credentials for the portal to kind of see how our pricing works, please reach out to me with my contact information here, and we'll get someone on that right away and take care of whatever situation or scenario that you have that you may be sitting on right now. Love to help you out with the deal that maybe you're having a little difficulty right now figuring it out. We'd love to take the opportunity to do that. With that, we're going to see you next month with, I guess we already know the topic now. So I appreciate you guys putting that on there, and we'll put that together for you for next month. So thank you. Have a great May, and hopefully this purchase season turns around a little bit and we get some more momentum this spring. So thank you so much.
Awesome. Thank you for attending. Bye, everyone. We'll see you on the next one.
Bye.